Once upon a time, in the bustling city of Amsterdam during the 17th century, a remarkable financial phenomenon was about to unfold. It was a period known as the Dutch Golden Age, and amidst the prosperous trade and economic growth, a new system emerged that would shape the course of history: the stock market. The story begins with a humble establishment called the Dutch East India Company. The company, founded in 1602, aimed to explore lucrative trade routes to the East Indies, seeking spices, silks, and other valuable commodities. However, such ambitious ventures required substantial capital, and the Dutch East India Company needed a way to fund its expeditions. To overcome this financial hurdle, the company devised an ingenious plan. They decided to divide the ownership of the company into smaller, tradable units known as shares. Investors could purchase these shares, becoming partial owners of the company and sharing in its profits and losses. It was a revolutionary concept that allowed individuals to invest in the potential success of a business, rather than solely relying on their personal wealth. Word quickly spread throughout Amsterdam about this groundbreaking opportunity, and people from various walks of life began investing in the Dutch East India Company. Merchants, craftsmen, and even ordinary citizens eagerly bought shares, hoping to benefit from the growing demand for exotic goods from the East. The concept of buying and selling shares soon became immensely popular, and a bustling market for these securities began to take shape. In 1611, a place called the Beurs van Hendrik de Kiezer became the central meeting point for merchants and investors to exchange shares. It was here that the world's first formal stock exchange was established, creating a structured and regulated marketplace for buying and selling securities. The term stock market emerged from the trading activities that took place within its walls. As the popularity of the stock market grew, other companies followed in the footsteps of the Dutch East India Company, offering shares to finance their endeavors. Investors flocked to invest in various enterprises, leading to the birth of numerous trading companies. The stock market became a vibrant hub of economic activity, attracting investors from across Europe. Over time, the concept of stock markets spread to other parts of the world as people recognized the potential for economic growth and wealth creation. The London Stock Exchange was established in 1801, followed by the New York Stock Exchange in 1817, both building upon the foundations laid by the Amsterdam Stock Exchange. Throughout history, the stock market has experienced its fair share of booms and busts, economic crises, and transformative innovations. Yet, its fundamental purpose has remained the same: to facilitate the buying and selling of securities, allowing individuals and businesses to invest in and profit from the growth of various industries. Today, the stock market has become a global phenomenon, with exchanges in major financial centers around the world. It continues to play a vital role in the modern economy, enabling companies to raise capital, providing investment opportunities for individuals, and serving as a barometer of economic health. And so, from the humble beginnings of the Dutch Golden Age, the stock market emerged as a transformative force, forever changing the way we invest, trade, and build wealth. Its journey began with the pioneering spirit of the Dutch East India Company, and continues to shape the fortunes of nations and individuals alike.